Hi guys, hope you're all doing fine. Welcome to the first episode of this investing series. Really excited to bring to you guys this content because investing will be a huge part of my journey and I really think that it is a great way to accumulate wealth over time. So what we're going to do today is I am first going to explain really briefly my strategy. Then I'm going to show you my first investment. So definitely stick around, grab something to eat or drink, and I'll see you in a second. My strategy is pretty simple. I'm basically just investing around $500 every month into my tax-free savings account. I really want to maximize the tax benefits of this account by putting a good chunk of money into growth stocks and ETFs, but I also plan on putting a lot of money into dividend-paying stocks so I could start building myself a nice income that I could directly reinvest into this portfolio. To start investing your money, you basically need to open an account in a broker. And I personally chose Wealthsimple Trade for two main reasons. The first one is the commission-free trading, and the second one is the user-friendly interface. Apart from that, they've also added a new feature, which is pretty cool for smaller accounts, which is fractional shares. So if you guys want to open an account with this broker as well, definitely check the link in my description, and you can basically earn 2 or 3 free stocks. So definitely check that out. So let's move on to my first investment. The first stock I bought was Alimentation couche-tard, ticker symbol ATD. It is a storyteller company that operates in more than 26 countries all over the world. They have gas stations, convenience stores, and also car wash services in 3 different brands that are couche-tard, Circle K, and Ingo. The stock is definitely part of my dividend growth strategy because, as you can see here, they have been increasing their dividend for more than 15 years. At the time I invested in it, the dividend yield of this company, which is basically the percentage of a company's share price that it pays out in dividends every year, was around 0.7%, but it has increased since then and is now around 1%. Just wanted to mention really quickly that some of the footage you're watching right now is actually from a few months ago when I originally started investing, but the quality of the videos were just fucking bad, and the videos were actually so fucking cringe. Decided to make new ones, and I will try to accelerate the process so that you guys can be up to date really quickly. So yeah, let's get back to our investments. The second stock I bought was Telus, ticker symbol T. This is a Canadian telecom company that offers pretty much every service that you would typically find in this industry. They also operate in the agriculture and the healthcare sector. They recently launched a virtual pharmacy service across Canada in January. With a current dividend yield of around 4%, I believe that it's a good, consistent, and reliable dividend choice, and they have also increased their dividend for more than 17 years. So this is definitely part of my high-yield dividend strategy. If you like what you're watching so far, just make sure you like and subscribe. It really helps a lot the channel. I'll put a link down below of a playlist I will create with every single episode so that it's easier for you guys to follow along. So yeah, let's get back to the last investment. Finally, the last stock I invested in was VFV, which is an index fund that's tracking as closely as possible the S&P 500. Really quickly, you can see an index fund just like a portfolio that holds multiple stocks. And its goal is basically to mimic the composition and performance of a financial market index. So in this case, the VFV index fund is basically the portfolio that mimics the composition and performance of the American index called the S&P 500. So as we can see here, since its inception, it has returned on average approximately 10% each year. The major things about this index funds are, first of all, its holdings, which are the top 500 companies in the US. It is obviously a bit more weighted into the IT sector, but that's where a lot of the money is. So I believe that's a pretty accurate distribution of the American economy. The last thing I wanted to talk about regarding this fund is the management fee, which is around 0.08%. This is basically the fee that Vanguard earns in order for you to invest in their index fund. It is really low in comparison to the fees associated with investment in the same funds through banks, which they usually call mutual funds, that can range from 1 to 2%. Since I'm still learning Having a big percentage of my portfolio in this ETF will allow me to have better diversification and will allow me not to be too much exposed in one particular industry. But at some point, after learning more about different companies and understanding more about their businesses, I'll probably have less exposure to these ETFs. Alright guys, this is all for today. Definitely let me know in the comments down below if you have any suggestions, recommendations about stocks, or this video or the series in general. I'll read everything and take it into consideration. So I guess I'll see you soon. Take care.